The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, as was stated a moment ago, and it's my pleasure to be here with the Tiger Technicians Hour, Monday, Wednesday, Friday, 11 o'clock until noon. Today I'm going to be doing a 2-hour program because I'll be doing Larry's show as well at 12 o'clock, so I'll be going for the next 2 hours. So there's going to be plenty of time. We're going to look at these charts. We're going to say what is happening. Yes, of course, we've got Draghi. We're coming up tomorrow, I believe. And that'll be important, just exactly what the response to the statement is. I never care about the statement. I only care about the market response. So let's go through the numbers. And, of course, always got to thank our starter. Right today was, as he is every day at 9 o'clock, Steve Rhodes leads right in. Terrific show. He's right in with Tom O'Brien, the duo together. Just another great, terrific composite picture of what's going on, plus other general news. And then I come on 11 o'clock till 12 normally, and then Monday, Wednesday, and Thursday, usually Larry Pesavento comes in. But Larry's away for now, and I'm going to be doing the show at least as many times as I can. So I'll be here today, and I'll be here tomorrow at Thursday at noon. That follows Kate Stolter's program. She does the Small Cap Roundup, and program all the way through today. So we've got Daryl Martin, then Dave White, and then, of course, Ken Shreve, and then Tom O'Brien wraps it up 4 o'clock until 6. Now, I think it's going to be very important for us to go through the time frames. We've finished August. We've begun September. This is my first session in September. I wasn't here yesterday to do it. So we'll do it today. And what we'll be looking at is, first of all, the daily chart. And the daily chart of the Dow. Oh, let me give you the numbers, and then I can go into everything. Dow is up 17 at 13,053. The S&P is down 21 cents at 1404. Interesting. Yesterday, the Dow was much weaker than the S&P. Today, the Dow is stronger than the S&P. Not much, but stronger. The comp index is down 4 at 3,070. Let's see. We've got gold up 30 cents at 16.96. Silver's down 9 cents at 32.31. Platinum is up 50 cents to 15.70. Oh, look at this. Oh. High-grade copper is up 5.1 at 3.51, so $3.05. That is really good. I've been watching this so closely because it's very important that with the information that we're getting from Japan, from China, I've been talking about this for some time. It's probably about 2 years now that I've been saying that in my historic look at China and what the news reports are as they come out. And first of all, I must mention that the United States has spent over 250 years trying to get capitalism right and doesn't always succeed, as we know. So how China in 25 years, or give it 30 years, is able to get everything right, it's impossible. It's just an impossibility. Great exaggerations, great misinterpretations, great misses, and an incredible elevation of the general domestic product and general standard of living. So there are always pluses, and what I've always said about capitalism is that capitalism is an incredible means of developing growth and income, productivity. It has an extraordinary life, but it also has a dramatic end, and then it has to restart. It happens it happens every single time. So capitalism is a methodology which runs its course and then has to maybe not necessarily restart as you did when you had the Great Depression, but recessions essentially do the restarts. Now, we haven't had the kind of recession in price of the Dow or the S&P, because we've only had about a 50% decline. I'm talking about a 70 or 80. I'm talking about the great decline of the NASDAQ, 80%. So putting this together with chart patterns, etc., and putting it together with everything that we're looking at, China has had a huge slowdown. Within that, there should be little growth spurts. But until, and if you look at the FXY, let me just grab that for a moment. We've got time today. I feel like I really want to elaborate on a number of themes that I'm looking at. You see, the daily made a peak D. Let me talk about this ChapmanWave methodology from the lowest, most identifiable low bar, in this case the 25th of June at 3162. If the technicals and the chart patterns conform, you should get at least a peak D. That's exactly what it did. 4 higher peaks. How does that work? Well, peak A was at on the 27th of June at 32.78. 1 penny above it starts leg B. That doesn't mean to say leg B couldn't fail. It just says that that's leg B. Leg B skyrockets all the way to 34.28. Then it pulls back almost to the starting point, but doesn't restart. It goes to 31.81. Then starts another little ABC. Actually, it's ABCD. Isn't that interesting? I should have done that. I did this very quickly just a few moments ago. It's a restart. It goes A, B, C. And those are usually much stronger. D, E, and finally a peak F. So that was a D in a conservative way of doing. No, that was a D in the larger context. But if you did in a very conservative way, which I like to do to show restarts as well, then what we've got here is a peak F. Peak F can very often have a very serious decline. And what does it do? It goes all the way from the top of 35.67, plunges down to the low that we've seen today at 32. Round number 32, that's above the second starting point of 31.81 and above the actual low of 31.62, which I'll type in, 31.62. So China, to me, is saying, we have overspent. We have done everything. We did the Olympics. All these countries who do the Olympics. Let me tell you, you drive past the Olympic villages and you ask people about what the cost is, and they just say, extraordinary. Some countries took, I think Canada once took about 20 or more years to pay off their village that they built. So 40.70 was the high the week of the 2nd of March. Now it's making the pattern that I call the dreaded H. If it closes underneath 31.62, the monthly says 29.39 is a target to the downside. And if you look at the monthly chart, it made a peak F top. It was once called iShares Xinhua China 25. Now it's called the iShares FTSE China 25 Index. Now, talking about that, what I would like to look at is, so China is still having a kind of an inside bar consolidation. If you take the high of 72.26 on the China 25, that's a very select group, but it's like the Dow 30. So if you look at the low of 1935, we are in the lower part of the range, the lower 1/3. So that says to me that it's very important to put China aside a little bit, and that's how I got to this copper, because I'm just going to the September contract for the moment. Copper is making a leg C to the upside in the September contract. Let me go to December, because people would normally be trading December from about now. And December, yes, same thing. A, B, breakout of the Chapman wave, falling X formation. You've got a low bar. Oh, this is really exciting, because that says that copper is having a very strong move to the upside. It isn't quite reflected yet in CCJ. You can tell I'm all over the show, I especially today, because, no, it's not CCJ, JJC. If I can ever, yeah, JJC is in leg C, maybe peak C if it doesn't make a new high, about 44.83 today. And that is a start. It's not the greatest thing, but it's a start to say that copper could be making an oval-shaped pattern that did not break to the downside in the Chapman wave inverted stork leg formation, but in fact is making a U-turn. And if it can take out the JJC, I better just go to the I'd like to go to the continuous contract, if you don't mind, because that's the one that has so much more information. It goes back years. Yes, if the high-grade copper continuous contract, which is at 3.52, is able not to break above, but to close above 3.56, the high was 3.5595, the week of the 6th of July, then it's starting to turn the 200-period exponential moving average into a potential support and a magnet, so that even if it goes high, it will still come back and test it. But it's really exciting that it's trying to break to the upside. I like that. So now let's go through some other things. The TLT we spoke about before has made a peak B, a powerful move to the upside in leg B, and then it was confirmed as a peak B yesterday. And until it breaks above 127.72, as soon as it goes to 127.73, the TLT will be going to leg C. Now, does it have to do that? Well, the stochastic's at 93% and the MACD is expanding. The weekly chart is the one that really is for me, the sandwich, because the monthly chart is looking good, peak C, and should go to a leg D. The weekly daily chart is good. The weekly chart needs a lot of work because the stochastic's only at 40%. It's underperforming, and the MACD has not yet crossed positive. That's the yellow line above the red line. If you're looking at Tiger TV, that will be usually I have the three charts up. The left side is the daily, the middle is the weekly, and the right side is the monthly. I look at all the different time frames. My subscribers to my opening call, that's my daily service, see these charts. I'm going to show you something now. Have we got time? Yeah. So the TLT needs to break above it, but it's in a high-level consolidation with a 120.52 low and 132.21 high. And I suspect it's going to bounce around here for a little bit. I'm not sure it's going to go to the top just yet unless the three bears, that's Bondi, that's bonds that we're looking at. Bonds break decisively above 132.21, this market will be coming down, our general market. If the volatility index, which, critical moment here, is making a peak C in the daily, holding the 9-period exponential moving average with very good technicals as well. If that goes above 18.96, it's 17.68 right now. That'll be the second part of our three bear story, saying, watch out if the volatility index goes above 19.76, the 200-period exponential moving average. Once it gets into the 20s, our markets become vulnerable. Hey, wait a minute. The dollar, DXY. The dollar is just doing nothing. The weekly chart made a peak D at 84.10. That's that middle chart. Monthly chart has made a peak D. And the daily chart made a, was that a D or an F? Just let me see. Made a peak D at 84.10 and has come down since. 80.73 will be a very important level, the magnet level on the dollar indexes chart. I'll be right back at 877-927-6648. Love to take your calls. We've got plenty of time today. Dow's up 22, S&P's unch. Be right back after these messages.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pezzamento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks, we're back. It was recommended to me that I look at the CAF, the China A-Shares Fund, Inc., maybe a better guide. Well, it's gone. It's retesting the low of 18.64. It's just broken that. It went to 1765 July of this year, and now I'm looking at the weekly chart, and now it's at 1768. So this chart is saying, be careful. So far, there's no real strength there at all. That's China. But I certainly think that bounces are likely. I'm not sure that the economy is going to turn around on a dime like this. It needs more time. Now, the other thing I want to look at was HG. Let me just check this out. The HGX, which is the Philadelphia Housing Sector Index. And that has made 145.37. There we go. C. This has made a leg D and possibly a peak D today in the daily. It's been a spectacular mover. And in the chart patterns I've been looking at, it's had a ChapmanWave. This is the middle chart right here. It's made the long leg up. So it's not single leg. It's just the strength of a powerful move to a peak D. In this case, I call it the single leg up. That's what you get when you're looking at a stalk, stands on one leg. Then you get the body of the stalk, and then you get the neck, which is now in, I have to say that I'm calling this G/B, because it could be a continuation to leg G in the continuation of the buy mode. At the same time, it could be going to APG, but it also, because the technicals are holding so well at 97% in the stochastic, the MACD is good, it could also be an alternate count B. I don't have to, you see, in the ChapmanWave, what's so beautiful about this particular technique, there are times where you don't have to actually panic or say, oh my God, a peak F or a G. As long as the technicals are holding very well, it all invariably gives you time, because it's going to say that 9-period exponential moving average at 141, it's at 145.82 right now. If it closes below that, you can start thinking, it could be a more serious stop if it gets into the Roman candle low of August, the week of August the 3rd. That's a ChapmanWave Roman candle low. And the monthly chart is really powerful. This is in a leg D. Now, this is fascinating because the ITB, I have no other choice but to call that's U.S. construction as a single, because it made a slightly lower low. It went, wait a minute, 6.33, 8.21. Maybe this is a leg D/A instead of just an A. That'll be interesting. That'll because it's a higher low. All right. Well, in the meantime, still very strong in the I shares. And here we've got a leg D to the upside with the alternate count. So, yep, same sort of thing, different letters. Sometimes it's the same as the indexes. The Dow Diamonds can give a slightly different ChapmanWave notation than the Dow itself, or the SPY and the S&P, or the Qs and the NDX 100. First caller we've got, is it Larry from Las Vegas? Is that Larry?
Yeah, that's it.
Hi, Larry. How are you?
Good morning, Basil. How are you?
I'm very well, thank you.
I have two questions for you, one in the euro and one in the pound.
Okay, fire away. Can I look at the EUR-USD, the currency pair, if you don't mind?
Go ahead. Sure.
Okay.
First question was, I had a nice setup, a sell setup in the euro, but I had a reversal zone, I guess you would call it, set up, and it reached it on Friday, and I didn't take the trade because it was the end of the week, it was the end of the month, and it was just prior to a 3-day weekend, so I didn't take it.
Can you just tell me, when you say a reversal, is it because of the, I call it an inverted Roman ChapmanWave Roman candle, the candle of the 31st of August, because it had that long wick, and it closed about halfway into the wick, and then it made a lower high you're talking about yesterday would be the reversal then. No,
it was, I'm looking at 1 hour, 4 hour, and daily.
Okay, that's fine with me. Let me do the same thing.
Okay. See,
I have something very interesting. Over the years, actually, this goes all the way back to when I did my CD introducing the ChapmanWave methodology. I'm gonna put it up now. I'm just gonna see if I've actually written it in as a. I'm going to explain something to you, which will be it'll be right, appropriate to what we're discussing now. Find. So I go to find, and I put C1, C2. I wonder if it'll pick it up like that. Oh, there's the music. It's looking, searching. It hasn't found. I will find it in a short while,
okay,
as we go to break, because it's going to explain something about the 120-minute chart, which coincides with what you're looking at, but the daily technicals were the issue that we're talking about. I'll be right back. We're with Larry from Las Vegas looking at the currency pairs. The Dow is up 32, S&P's up $1.15. Be right back.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Tom O'Brien's daily trading newsletter, Market Insights, has delivered powerful results for subscribers, and now is the perfect time to try it out for 2 weeks absolutely free. We're so confident in the value Tom provides his subscribers in his daily newsletter that through Labor Day weekend only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, completely free of charge. Will even cover the shipping cost. Cancel at any time during your 2-week free trial to Market Insights and pay nothing, and keep Tom's free book as a gift from us. This offer is only valid for new subscribers. We've only extended this offer once before, and it will only be active for a short period of 2 weeks. So act now to take advantage of this great offer and be ready to capitalize on a more active, more volatile market once traders return from their August vacations. All the details are on the front page of TFNN.com. Sign up for your free trial to get your free copy of Tom's best-selling book today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We are back, and right now we are on with Larry in Las Vegas. We're talking about the Euro. It's called the Euro/US dollar currency pair, and it's trading at 1.26059. And what's really important about this is that there's a pattern that I'm talking about, and Larry had a reversal signal the other day. I too had the reversal signal. Mine comes from a different concept, and that's the concept in the Chapman wave. There are two things that can happen that make the leg C to maybe D very important. There's something that I call the overlapping wave, and at one point the euro was at 1.246. That was at 11 o'clock on the 27th of August. It ran up to two peaks and then pulled back. Started another little buy mode at 1.248, again at 11 o'clock, but this time on the 30th of August, and it went to AB, and then it had a huge C. The idea of the overlapping wave and the Chapman wave methodology is overlapping wave is that when two of these different waves come together and they are underneath a peak D, they become very powerful. And that power, let me just see if I can move this chart here a little bit. No, I don't have it there. I'll find the overlapping wave. The overlapping wave, this is a great example of the overlapping. I lost my, it should be right in front of me, and I mislaid it. I'll find it in a minute. But the idea of the overlapping wave is that in the technical analysis, if you go to a peak B or a C, it pulls back, doesn't break the low of the initial low, makes another peak A, B, or in this case, it's only to B. When leg C overlaps, not just the newest leg B, which would peak B, which is 1.25 at 23 hours that's 11 in the evening, on the 30th, it also overlapped when it broke out the high of 1 o'clock on the 28th. That's really powerful, and that went to a leg C. Normally, you would expect that it would also go to a D to complete the move. But in the ChapmanWave, there's another technique that I use. At C1, which at this initial C, which is on the 11 o'clock on the 31st, funny, each is at 11 o'clock, at 1.26369, it pulled back, made a cup formation, tried to retest. It couldn't quite get there, 1.2627. And because the technicals, I'm holding the chart up here, because the technicals were weaker in the stochastic on this particular move, it said be careful, because it had all the characteristics of a leg D. It just didn't quite make that extra penny, 0.001, to go above the previous peak C. The next pullback is a pattern that I call the drop bucket. In my CD called the ChapmanWave methodology, there's a pattern that I call the drop bucket formation. There's the overlapping wave, chapter 16. I'll get there in a little while. But the drop bucket, chapter 2, what it does is it explains it's like a double top formation. And that double top formation says you can go back towards the left side high, you can close a tad under it, you can close on it or a tad above, but the next pullback is absolutely critical, because if it takes out 1/3 of the cup formation, not only will it pull back to a half, but it's liable to touch the low of the cup. That's exactly what the pattern of Caterpillar that I show you from the February of 2002 shows, and that's exactly what happened here. Look, the stochastic was pulling back. It went below 1/3. It broke the low of the cup. And then there's another pattern that I talk about. It's a 1-to-1 formation. And that 1-to-1 formation went above the 200-period moving average, at 1.25011. And what did it do? It spiked up huge today. Why? There is an outstanding, Bud used to talk about an IOU. And in this case, a peak C1, C2, which acts like a D, very often, if the left side low is not broken, can come all the way back and then make that peak D. So I'm anticipating that there's going to be a move, that there could be. Can't say there's going to be. There could be a move above 1.2627, and if it does that, then there's probably going to be a breakout above 1.26369, and that'll get you to leg D. And at that point, we've got to be a bit careful, because it could come back into the cup. Now, funnily enough, if you look at the euro on another time frame, if you look at it in the weekly time frame, there's a cup formation, a number of cup formations, and they've gone to lower lows. And this is the first quite decent rally in the weekly chart in the euro, but it won't mean anything until it takes out that high of 1.274 that was made the week of the 22nd of June. So to answer to your question, which was that you had this pullback, it actually pulled back quite nicely for pips if you were short, right?
Yeah, I did go short.
Okay. Are you still short?
No, I actually got out this morning, yesterday. I think it was early this morning, and then I was long, and I'm already out of that one. So
you see, what you're doing, you're using whatever techniques you're using, they're a little different to mine. They kind of parallel what I was looking at. So I have to commend you for a fabulous trade. It was a leg E up in the daily chart, and at leg E, you really have to expect that there could be some kind of a digestive move, and that's all it is. It isn't. But if you, right now we were talking and it was at the low of the day of 1.25011, I'd say to you, whoa, be careful. It's sitting right on a technique that I use, which is called the ChapmanWave up channel. You've got a support area, which is a propellant area or a buy zone, and you've got a sell zone. That's what it got into the other day. But now it's trying to go back. And if it goes above that red line, if you're looking at Tiger TV, and it can go above 1.264, which would be above the high of yesterday, that'll be quite positive because it's saying, I want to test that upper area. I want to try to get to maybe the green line, which is up at the 1.26, almost the 1.27 area. So your trades were great. What would you do now using your techniques? What would you be looking for if you wanted to get into a new position, whether it was long or short?
Well, I'll tell you the reason I initially made the trade was it was a confluence of a 786 and a 382 on the daily, and it was an ABC completion.
So you're talking about now. This is interesting because we have a caller that calls in very often, and we've been looking at this peak C1, C2. This is a double top formation, which goes back to the 18th of June, and then a slightly lower high on the 20th. So you're talking about the retracement from that level, right?
I have to go back here to my charts. Well, I'm talking about. I don't have everything plotted in here on my charts now because the trades.
Okay, but that would correspond close. It's
right.
Yeah.
Yeah,
that would be the area.
I was using fibs and ABC, and that's the area that I had all that confluence in. And the only reason I didn't jump in on Friday was just because of those the reasons I gave you earlier with the holiday and the end of the month into the week.
Right.
But then it gave me a second chance yesterday, and that's when I took advantage of it. It dropped real quick. I reached my profit targets. I got out, and then I got signals to go long. So, and then I woke up this morning and I looked at my charts. I said, "Hey, I'm already out of the trade." So I was happy, right?
So now listen to this. If you take the low of 1.204, that's the low of the 24th of July, and you take it to the high of let me see, where did I go? Oh, to the high of the peak C of 1.24, and you draw parallel lines, vertical lines, you can get an extension, and there's three extensions. The last extension went to exactly 1.265, and the high that was reached was 1.2627. So that's another technique that I sometimes use. It is a vertical expansion of significant lows to significant peaks. If I can draw them in parallel lines, that's vertical lines, very often it'll give me the extension. That's almost like your A to B equals C to D, except I'm using the A to B on my technique, and I just keep referring back to it. So that's another way. It corresponds to exactly what you were looking at. So now this is the other thing I wanted to mention. I wanted to take a little time here, because if you look at this, do you put the stochastic and the MACD on your chart?
I use RSI. I just use it kind of as a confirmation. I don't use it as a entry or exit.
Well, the RSI is at about 61, 62% now, and it's positive and holding very well. Right. I'm going to make a recommendation just in terms of techniques, because in the next couple of weeks I'm trying to set up a 2-day seminar here in the Boston area. But in preparing for that, I'm going to be showing a number of techniques that I like to use just to introduce people to them. If you take another chart, if you have another space on your platform, on your window, just take a chart and use it only as an experiment. Don't try to trade from it yet, because I'm just introducing you to it. If you're looking at Tiger TV, you will see that my stochastic is at 84%, and the MACD has not yet crossed negative, and that says there's still internal strength in the stochastic. Until that changes, I have to consider that the 9-period moving average of 1.254 is going to be a nice springboard for pullbacks. When that becomes a resistance, I'm going to say that up channel line that I've drawn, and that has a base around about 1.244, that's going to be key for support. And if it breaks under that, stochastic will probably go to 79 or 78%. So why don't you just add a slow stochastic and a MACD to one of your charts, and experiment with it. You can look at it back historically, and you can look at it any way you want. But I think it might help you, because that would have said that the pullback that you saw coming last week correctly had limited downside at this particular point. So I hope that helps you.
Okay, good.
Thank you so much for calling. Great. And congratulations on some very good calls. Folks, pips are what we use when you're trading the currencies, and each pip has a certain number of, a certain dollar value, or micro dollar value. In other words, 25 cents or 10 cents or 20 cents, whichever, whatever you're looking at. So instead of talking about ticks that the way we're looking at it, if you're trading the E-minis, which are in 25-cent increments. So, and the euro is 12.50 per pip. Thank you. We have a fantastic resource in the DAN, and MMS is telling me an ABCD was 126.44 in the September futures. That was the rally target. So thank you very much. So let's go on. Now what I'd like to do is, I've spoken about, it was very important to go to the euro right now. Now, of course, whatever Draghi says tomorrow, it's a response. Let me give you this I'll be doing the show tomorrow at noon, so maybe during that time we'll get a better sense of what's happening. If the euro starts to plunge and it goes closes under 1.24 by tomorrow afternoon or Friday, or it closes above 1.26, let me just see here, 1.265, if it closes above that 1.265 will have a target of the 1.269, 1.27 area in the euro. Why is that important? Because if the dollar, which is attempting here to try to make some kind of a base, and it's in the same down, it's kind of a wedge formation, but it has the same buy zone. That buy zone comes in at about 80.73, this is the index, and 81.16 right now. So if the dollar is going to do anything and it breaks to a leg after the downside below 80.96, it says watch out, because a close below 80.73 says yes, we're starting to get to the magnet area, we're going lower, we'll still get you back to a bounce above 80 or to test the 80.73 level, but it's not good, because if you close below it, you're looking at the left side low of 81.90 back on the 19th of June. What did I say it was? 81.19. So, now that's that. Now let's look at some key indicators. 1.19. If you're looking at, for me, the Dow Quartet, this is what my own little index that I made up decades ago. GE, if GE, which is in a very gentle downside slope, I could call it a channel, but it's not. It's actually one of the patterns that I call the falling X, because it's an expanding wedge formation from the 21.19 high. It's at 20.69 right now, up 17 cents. That's a good sign. And the stochastic's making a W formation. This particular pattern says that GE, which I now consider to be more than UTX, a little bit of a leading indicator, because many times in the past 6 weeks to 2 months, it's led on the way up and led on the way down. If GE is able to break and hold in the 20.90 area, preferably 21.20 in the next week and a half, rather than breaking down and going to the under 20 to 19.18, that would be the parameters I'm looking for. And we'll talk a lot more about it when I get back. Basil Chapman, Tiger Technicians Hour, 877-976-48.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question, are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this. Today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, we're back, and the Dow's up 35, so we just got the remaining couple of minutes. My 4 horsemen, that's the GE, IBM, Triple M, UTEX. Sometimes we have 1 or 2 of them in the portfolio. At this point, we have none. But I'm looking at G as a benchmark, even more than UTX right now. The weekly chart, I just spoke about the daily chart and the parameters to watch. But the weekly chart is broken out, and it's in, I have to call this leg B. There's no other way. There's no other letter left. So it's leg B, which says that there should be, at some point, over the coming weeks, there should be a high above 2190 for leg C, and then it should go. So this is a forward-looking indicator. The monthly chart has improved tremendously in GE, as has the weekly, and the monthly chart yet, although the technicals are really strong, it hasn't broken above the 2165. I suspect it will do that at some point. But will it wiggle around this 9-period moving average of 19.89 in the monthly chart first before it does it? I just don't know. I think we're getting very close based on the fact that We know where the bonds, know where the VIX goes to. The VIX goes to the 20s, and I have to say I have no choice but to become bearish, at least in the shorter term. So really simple. Now, if you look at so that's GE. If you look at IBM, I have to wonder, has IBM made a significant peak G high in the monthly at 210.69 with a slightly lower following month of May at 208.93? I don't know. It made a peak D, and it's got the same pattern in the weekly as GE has in the daily, and that says it's made this falling ass formation, but it has broken to the top side. So IBM has to go above the round number 202, very important round number, because below it says rallies will fail. The moment it closes for 2 out of 3 weeks above 202, it says, hey, be careful, I want to try and tackle the high of 210.69, and the MACD is okay, but not great, and the stochastics under 80%. If I look at Triple M is trading at 91.66, down 2 cents. It too has made what I have to call a peak C in the weekly. Still very strong. Leg C in the monthly. Still, the technicals are improving, not great. And the daily has had a fantastic move up, but a very sharp pullback, but still in a containment area, using up more time than price, and the stochastics at 26%. So it could bounce, but the MACD is still negative. So until the MACD, the yellow line, that fast-moving average is the daily chart, can start to move to the upside, that 9-period moving average of 92.17 is going to be key. It needs to close above the long-legged doji of round number 93 high on the 31st of August to say, I'm making a U-turn, and it'll look like this, a cup formation to go and retest the previous highs. Otherwise, it's going to break down as soon as it closes under 91. I'd say be careful, because it could quickly, there's very little support until it gets to the long-legged doji of the 2nd of August. And the final one is UTX. And don't forget, after this show, stay tuned, because I'm going to be doing Larry's show, and I'm going to be doing a little bit more in the futures, and I'll be looking at commodities as well. So UTX daily went to 81.90, made an arch formation, came back. It's touching the 77.42 200-period exponential moving average. The weekly chart is not great, but it's not bad. It's in a sideways consolidation range. My biggest concern is that if UTX monthly chart is making that pattern I call the dreaded H, and it fails in the next few weeks or in the month of September and takes out, well, 66 is 11 points away. But if it does, certainly if it takes out the low of last month of 73, I've got to get worried, because that's a pattern that could be very negative. What's needed is for UTX to push from 77.80 now into the 80 area. So those are the levels. I'm watching them very closely. This is a potpourri of ideas and concepts. I'll be back for the next show. Stay tuned. Basil Chapman, and just stay there. I'll be right back for Larry's show, and we'll continue in this vein.